With big tech earnings out of the way, are those names overvalued or not? Let's ask the Dean of Valuations, Aswath Damodaran. He is the professor of finance at NYU's Stern School of Business. Professor, welcome back.
Thank you for having me.
I'm going to get to that in a second, but I want to zero in on how we first teased the segment here and why you told our production staff that May is going to be the month that determines how returns for the year will look. Why so?
I think the first quarter was all wine and roses. Everything was great. Everything looked like it was coming together. The economy was staying strong. Inflation looked like it was coming down. And I think in April you saw the dark side of inflation, that it stayed stubborn, and you started to see the first pieces of evidence of maybe not a recession, but a slowing down of the economy. And I think that's why I think the markets had a tough time last month. The question is what happens going into May, because it's not just the facts on the ground, it's the mood and momentum that's driving the market. And I think, you have a good day today. I think that's a good way to start the month. But I think there'll be more tests coming down this month. And if we don't have a good month, then I think we're heading into September from a position of weakness. And we know the politics are going to take over that. You're going to have an election. You're going to have things happening. And I think you're going to have a lot more stresses in the market. Better to do it when you're in a position of strength.
I'm truly interested to know, if I would have interviewed you on Tuesday, your answer to where your market view might be could theoretically be different than it is today, given what happened with Chair Powell and how he wasn't as hawkish as feared. And now that we finished mega cap tech, is that a fair assessment? Do you have a different outlook based on what happened this week, both through the Fed meeting and the data?
I think we're resetting expectations again. I mean, we've been doing this for 2 years, and we're constantly trying to figure out, hey, what is the future going to deliver? And I think it's amazing, and you're right, over a period of a week, how expectations get reset. And it's almost like the expectations are getting reset to, you know what, we're going to have slower economic growth. The Fed's going to be okay with it. Because I think there was a point last week or so where people were talking about the Fed potentially being able to raise rates, not lower rates, because inflation is back, the economy might be harder than expected. So I think that expectations get reset, but today we have a good day. But who knows what the next week will bring in terms of expectations getting reset.
But has it also in turn reset your view on where valuations are? I mean, at 5% on a 10-year, perhaps valuations of the S&P 500 look stretched. Maybe not so much. Maybe not at 4%.
And I don't think it's debatable. I mean, we've been stretching valuations, and that band is getting tighter and tighter. I mean, I was quite open about the fact that I own all 7 of the Mag 7 stocks. None of them is undervalued now. The reason I own them is I bought them at convenient prices. And I don't think they're overvalued enough to dump them, but I wouldn't be buying any of the 7 today, perhaps with the exception of Tesla, which, at least based on my valuation, is pretty close to fair value. The rest are stretched and getting more stretched by the moment. Alphabet and NVIDIA in particular keep pushing the upper limits of what I think value can bring. But as trades, it still might be great trades for the rest of the year.
Wow. I'm surprised to hear you say that about the group as a whole. I think some would look at, let's just use Alphabet as an example, and you can throw Meta in there, too, as having valuations that are certainly much more reasonable, they would suggest, than being anywhere close to overvalued.
I mean, I think, if you put in 12, 14, 15% growth rates, you can get to the value. But I think the most interesting aspect of what's happened in the last couple of months was both Alphabet and Facebook and Meta announcing they were going to start paying dividends. And that, to me, is an indication that within the companies, there's a recognition that they're more middle-aged than young companies. And I think the rest of the market might still think of them as these amazing growth companies that can keep double-digit growth going. But I think there's more realism in both companies as to what they can actually deliver in terms of growth.